Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Saturday, January the 4th, 2025. We are going to do a Ethereum special today. In our previous webcast, we primarily went over Bitcoin. And since Bitcoin is not doing too much today, which is absolutely not bearish, by the way, that is just in our opinion, simple consolidation so far of the recent gains. We are going to go into greater detail for Ethereum because there is a lot of action going on, I would really think. Remember, we are tracking the Elliott wave, and we believe Ethereum is in this first wave. This is our primary wave count, and that we've completed most likely just this wave 4. We're going to get a wave 5 and then a wave 2 pullback before we see wave 3, 4, and 5. Okay, this larger wave 2 pullback would then go inside with a larger wave 4 in Bitcoin. And then, of course, the wave 3 would go inside with the final 5th wave for Bitcoin into end of year. Remember, Ethereum and Bitcoin kind of follow the same path, but not really. And I like it when things start to diverge. Oftentimes, Bitcoin and Ethereum bottom and top at a different time frame, sometimes a couple of months later or earlier. Just as Ethereum actually already bottomed in June of 2022, I believe Bitcoin bottomed not until late November of 2022. So again, we can never be entirely correct because we are dealing with a stochastic, non-linear, multivariate environment, and it is always up to the subscriber and the trader and the investor, you, to make sure you have appropriate stop losses in place, because we do not want to lose too much money all the time. Okay, so let's go straight to the charts without any further ado. Let's start with Ethereum. Lots to cover. Our preferred wave count is that we are in this wave 5 to around 4,900 ideally. Okay, it doesn't have to be 4,900. It can be 4,200, but 4,900 would be pretty ideal based on Fibonacci relationships. So we've completed so far 5 waves up from the September low. 1, 2, 1, 2, 3, 4, 3, 4, 5. Now this rally from November to December is a little discombobulated. It's quite overlapping. So we think it looks like a diagonal 5th wave. Okay, so we should now be in this wave 5, 1, 2, 1, 2 setup. So far, it is following on nicely, and we have broken above the first and the second warning level for the bears. Of course, there's resistance at this downtrend line, which connects with the all-time high. So we've pretty much placed the third warning level for the bulls at of bears, sorry, at about 37. 25-ish, which coincides pretty well with this downtrend line. And you can see we're trying to recover above the Ichimoku cloud. We're still above the 200-day long-term trend is still good. We're back above the 50-day intermediate-term trend is good. We're above the 20-day short to intermediate-term trend is good. We're above the 10-day short-term trend is good. So everything is turning bullish. Now we also want to see the 10 and the 20 above the 50. Okay, so like we had here in November and here in early December. That's a bullish uptrend. The alternative is that we just completed I would say, irregular expanded flat wave 4. So this is 1 degree behind, right? So still in gray 4, gray 3, green 4, etc. Okay, that's the alternative. I don't really like it. We'll just track it, okay? But this is alternative. It's even more bullish. So then we get a rally, a pullback, and another rally before we see the larger second wave. The most bearish option I can come up with short term is, of course, well, the most bearish one is that we only did 3 waves up and we're going to go back to the triple digits. I'll show you that one in a moment, least likely, so that we have an A, a B, and a C. We're right in the ideal B target zone, 3,600, 3,875. And above 3,875, this option is pretty much off the table. So this is the third option, okay? Why do we have so many options? That's because we're not yet clearly trending. But this is in order of least preference. The preferred wave count, because this is what we've been tracking, is this. Then the alternative is 2 more steps higher. The third alternative is for a protracted wave 4. It's possible, but so far we don't really see it yet. That's it. It's just a possibility. We don't have any confirmation. So bigger picture wise, remember this chart, it's the monthly chart. So we have our 1, 2, 1, 2, 3, 4, 3, 4, and that we've completed this triangular wave 4 in 2024 and are now working on a new impulse higher. So these are monthly candles, and you can really see if we zoom in that we so far have done 3 waves up from the summer low, as you can see here. So this is an A, B, and this is C. Okay, so question mark 4, we have no confirmation yet. If we get 5 waves up, I'm pretty certain that wave 4 has completed in triangular fashion. Okay, so again, 4th waves can be many fashions, many forms. Can be triangles, can be flats, can be double zigzags, you name it. In this case, it's quite a bullish triangle. So then you have a bull flag pattern. So this is then your flagpole. This is your bull flag, and you add it. And again, this still targets into 15,000 potentially is high. So log scale. So we're just going to look here at the closing prices, 1, 2, 3, 4. And if we close, of course, higher, ideally above this downtrend line, right, which is the same as this downtrend line. If we close above it, then I have confirmed 5 waves higher. I have it here at 4,900, and then probably a pullback back towards last month's lows, which are somewhere around the 3,000 level. I would say that's probably what we're going to look at. 3,000 level, that's a 62% retrace. And then the 3, 4, and 5, based on log-scaled Fibonacci extensions, targets close to 9,900, a drop back to 7,000, and then another rally into the 10 to 15,000. Okay, that's what we're still looking at. That would be the ideal path, and that is our preferred path until proven otherwise. Again, the most bearish alternative I can come up with is that we just completed a B wave and we're starting a C wave. Not my preferred wave count, and this will only kick in if we start moving below, I would say, 2170, somewhere around there. Okay, that's then becoming more like from current levels. Okay, if we do 5 waves up, this is of course entirely off the table. This is just a insurance policy. That's what we are using. This is not something we trade for. We're not going to short Ethereum or go into SETH or something like that because this is a possibility. No, this is just an insurance policy, and that insurance policy will only get activated. We're only going to get into the accident if we drop initially below 2170, and then we need to drop below 2120. Okay, and ultimately all the way below 1,000 to fully confirm it. But below 2700 is already a very good indication this is the case without moving higher first and make 5 waves up. Well, if we do 5 waves up, I don't think we'll ever revisit these levels before we visit 15,000. Why do I say 15,000? Well, let's have a look here first and foremost at the 4,900 level. So this is Ethereum since 2022. I've shared this chart once or twice before, a long time ago. And here we had a consolidation and a breakout. We had about a 50% rally. Consolidation breakout, 63%. Consolidation rally, 120%. We take an average, that's about 80%. Breakout above 2,700, right? This is why the 2,700 level is so critical. Should target on average 4,900. So that's one of the reasons we have 4,900 on the map. 4,900 is also the previous all-time high. Okay, so that's probably what we're going to end up with for our first wave. All right, logical, very logical. Doesn't mean it will get there, but it's very logical, or thereabouts. That's that one. A bigger picture wise, we've had here this is the chart since July 2015. We have the rally and then a correction of 68% and a rally of 22,000%. A 90% correction or 94% correction, a 6,000% rally. So if we take the ratio between those two, we expect the current rally to be a similar ratio as 22,000 and 6,000. That would be around 1,700% rally from the lows in 2022. Okay, from the lows in 2022, which was a 82% correction, 94, it matches all very nicely. Targets 15,000. Okay, simple math. Doesn't mean we'll have to get there, but this is simple math based on continuation of relationships. So that's why we are targeting 15,000 plus based on this. And of course, based on the Fibonacci extensions, the 200% extension on a log scale, with the third wave extension at about 10,000, a drop to 7,600. And that then easily, if we add another 7,000 to that, gets us to 14,000. Remember, this is log scale, okay, not linear, log scale. That's why. And so far, we have no reason to believe this is not the case. We have still the potential for 5 waves up. If we're 5 waves up, then I would say this one has been confirmed. And then I expect to drop back to about 3,100 and then a rally, as you can see. With, of course, the alternative, this being a B wave of a very protracted wave 4. It's possible, most likely not likely. So, okay, moving on to Solana. How's Solana doing? We still have the potential wave 4 low here in December, and we should be in wave 5 to ideally to 80 to 85. A very deep, protracted 1, 2, 3, 4, 5, 6, 7 swing wave lower. This is then a double zigzag lower for wave 4. As always, after 3 waves down, expect at least 3 waves back up. Okay, so we had ABC lower here, right? And then we got ABC higher. And now we had another ABC lower. So this is like a WXY, a double zigzag. But we have no overlap here with 162. And we've bottomed nicely. We've broken above the first warning level, close to the second warning level, which is very close to the 50-day simple moving average. This is our preferred wave count, contingent on holding above 175. How we're doing for ETHE? Well, this one sums up pretty much our 2 wave counts, the preferred and the alternative, not the second alternative because that's so low odds, where the recent low was either all of wave 4 and now we're wave 5. That's the preferred wave count versus the ABC, okay, for a deeper already correction. Very possible. Okay, it's still possible to see this. B is looking higher, 5 is looking higher. The B wave is targeting somewhere around 32.5 plus or minus 50 cents, somewhere around there. If we start breaking above $31, it really starts to increase the odds that this is not a B wave. But we can allow for a little bit higher prices. It's not the end of the world just yet. Again, you cannot position yourself for this potential C wave. It hasn't been confirmed, so you cannot position you for something that may happen. Okay, you just don't. You position yourself for what we're seeing, and that's higher prices. All right, on to the miners. I got some interesting questions about the miners. I really like RIOT a lot more than Mara. Mara is very nasty, so I'm going to leave that one for a while. Nasty overlapping. RIOT looks cleaner to me. I still think we have 5 waves up from the September low. 1, 2, 1, 2, 3, 4, 3, 4, 5. Also here you can see very extended wave 5 and a double zigzag wave 2. A, B, or it's almost like a flat actually, more like a flat wave 2. So looks pretty good to me. Right here in the ideal target zone for the blue C wave, which is part of the black wave 2. Okay, so this has been somewhere around a 50 to 62% retrace. So this is of course a daily chart. As long as I would say this week's low or last week's low, well, it's still this week technically. This week's low holds at about 996, 997. We're going to look for $20 to $25 at a minimum. Okay, 20 to 25 for the wave 3/C. If it's a third wave, 25. It's a C wave, only probably somewhere around 20. Of course, we need to break above this downtrend line. All right, this downtrend line is absolutely critical. It's been in place since the 2023 high. We failed here. We failed here once again. So we failed once, twice, 3 times, 4, 5 times. So probably 6th time is the charm, right? That's what we're looking for. Also, as you can see, we have a little bit better defined 5 waves up. So this is then A1, of course, or 1A. Just as we showed you, 1A, and then we bottomed for 2B, and you can really see how complex and protracted this wave 2 was, right? Look, wave 1 was about 6 months, and then wave 2 was from July 2023, almost a year and a half. What a difference. But this is clearly corrective price action, an A, a B, and a C wave lower. And now we're starting to impulse once again. So this is why we believe that we're going to see higher prices and that we eventually start to see a nice breakout. Okay, so again, extended wave 5, I'll show you the wave 2 ideal target zone, of course. And then you can kind of get an idea of where exactly we bottomed. As you can see here, right at the 62% retrace, okay? I just did it the wrong way around. So it had a 100%, there you go, 62% retrace. Doesn't get any closer. And then, of course, we have the blue C wave. And initially, I thought this blue B wave was here, but we got a protracted, once again, wave 2. And then you have, of course, the wave A here and then the wave B. And as you can see, we got pretty close to a CSA extension. Okay, so the ideal target zone would be there. It's moving up a little bit higher. I think it got a little bit moved. That's fine. Or maybe it was based on that one. That's okay. So we're right there, 62% retrace. And once again, at a minimum, 19.5. Most likely, we're going to go to 25.5 plus. And let me show you that as well on the weekly chart. So it shows a little bit better. 1, 2, 3, 4, 5 for 1A, A, B, C for 2B, and a really nice ending diagonal C wave in red. 1, 2, 3, 4, 5. Impulse higher, loud and clear, in my own opinion. Up week, down week, up weeks, down weeks. All right, 5. ABC lower for 2. And here as well, as you can see, we can even target higher into 35 level, okay, based on the 1A, 2B. So the 25 level targets the wave 3, 4, and a 5. Okay, so the 5-ish is somewhere around low 30s. This wave 3C, 35, but it can also be 1.236 length of 1A. And that targets around 27. So we're looking for higher prices. This is the initial impulse we're looking for. Things start to look good. Okay, money flow is positive. The MACD looks positive. We're looking for higher prices. And of course, a breakout above this downtrend line, a weekly close above it, would be fantastic. That would really confirm the wave 3. Looks good. Okay, we're getting quite close to a significant breakout. It's all contingent on holding this week's low. As long as we hold this week's low, the 1-2 of 3C is complete. Okay, this 1-2 and this 1-2. So then we're getting close to the third of the third wave. The monthly time frame as well, we're holding above the short-term monthly moving averages. The 10, the 20-month moving average. The 10 is at 986, the 20 is 1123. And we just need to break above the 50 and the 100 month. Okay, then we're starting to look pretty good. Actually, we are already above the 100 month, only the 50 month. That's been resistance. And clearly get above 20, we're going to target, I believe, 35 for that 3C. That's the bigger picture with some internal smaller swings going on. You know, nothing to mince about. If we go to 25, drop back to 17, it's very possible. And then once again to 30. We'll track it accordingly, but this looks still bullish. Okay, it really does. I like it. The daily, the weekly, the monthly chart all start to line up quite nicely. Okay, so this is even more bullish with a primary 1, primary 2, but overall gesture of all these charts is higher prices contingent on holding above this week's low. Okay, that's really the bottom line of all these charts. The same, of course, for Ethereum. As long as we hold above the lows made this week, we're good to go. Still looks like a nice 1-2, 1-2 setup in place. And alternative is for 3-4-5 setup as shown here instead of one push higher, with the most bearish one just to be protracted 4 from a bullish perspective. And then, of course, the most bearish one, once again, is that we're just in a rotten, protracted, long B wave like this. It's not my favorite at all. Okay, it's just a possibility. That's it. Low odds, give it 10%. I prefer the 5 to 4,900, 2 to about 3,000, all the way then almost to 10,000, 4, 5. That's the key. It's going to be fun. I think so. It's going to be really fun. This is a curling price pattern. This is really, really starting to look wildly bullish. That's my forecast, contingent on holding above 2,700. I think we can start to look forward to a fantastic bull year. That's all I have for today. I hope you appreciate it. If you have any questions, I'm here to help you. It's not easy. I'm pretty sure I might not have explained something entirely correct. I know you guys are not the edit wave expert. I am. And sometimes it's very difficult to explain something that is second nature to you, to somebody else. And then I might brush over things that you perceive as unclear or difficult. Okay, I try to do my best, and I don't have a teacher degree, so maybe I should get one. But nobody's perfect, and I would like for you to contact me if anything is unclear. But so far, bottom line is we're looking for higher prices this year for Ethereum, Solana, ETHE, RIOT, and most likely there for Mara as well. But so far, the price action is still a little unclear to me for Mara. But RIOT, I really like. Take care, trade safe, and I'll catch you all next week.